watching here the FTSE, the CAC 40, the DAX. They've all trended lower and lower and lower, given up their gains for the day. Is there a growth scare in Europe?
I thought it was interesting that the inflation outlook didn't have a particular bias, but there was one on growth, Matt. She says that the risks to growth are tilted to the downside, whereas for inflation, there's no change to the forecast. For growth, they've changed their forecast lower for this year and the years ahead. So that's notable. It's a difficult outlook to navigate as they go ahead. She's talked about this meeting being unanimous on the Governing Council, but behind the scenes we know that they're divided over where the neutral rate lies. She wouldn't comment specifically on where she thinks it is, though she said it would be simpler to know as they get towards it. And it's no surprise, therefore, that she didn't want to give anything away about whether there's going to be an October cut. She says it's going to be data dependent, meeting by meeting, and they're not fixated on a single number, she says. So don't go crazy, is what she's saying to traders, if inflation drops in September, because it could rise again.
All right, don't go crazy, Lizzie Burden. Really appreciate your reporting. That's Lizzie Burden at the ECB in Frankfurt. Of course, after the bank cut rates by 25 basis points, but was clear on the future path not being predetermined. Meanwhile, let's get over to U.S. markets. The U.S. market has been open for about 7 minutes, and stocks are searching for direction after that big reversal we saw yesterday. The S&P 500 currently flat, a little bit higher right now, maybe if you're an optimist. Same thing, too, if you take a look at the NASDAQ 100. Of course, NVIDIA saved the day yesterday, really leading that rebound we saw on the NASDAQ 100, on the S&P 500. The Russell 2000 is your leader at the moment. The small cap index currently up about 0.5%. Meanwhile, some stocks to keep an eye on at the open. We have shares of Alaska Airlines soaring after the company raised EPS and profit expectations for the current quarter, riding a wave of strong travel demand and lower fuel costs. Meanwhile, Delta sees adjusted EPS for the full year above $6.50. That is in line with previous estimates. Shanali.
I'm also keeping an eye, Katie, on Moderna, which plans to reduce its research and development budget by almost 20% over the next 3 years. The company is struggling with profitability as vaccine sales disappoint, Matt.
Yeah, and Oxford Industries is lower after the apparel company cut its annual adjusted earnings per share guidance to a level below the average annual analyst estimate. I should say Oxford owns Tommy Bahama.
Yes.
I just took off a shirt to put on this suit.
Thomas Bahama.
And Lily Pulitzer. Is that still a big thing?
For some people.
Yeah. Certainly a thing. It exists.
I mean, my daughter has a Lily Pulitzer onesie.
There you go.
You know.
Yeah.
And how old is your daughter?
10 months old. Let's take a closer look at retail costs and sentiment with Bloomberg's Abigail Doolittle. Abby, what do you got?
Well, we continue to have this bifurcation amid the consumer. Investors trying to figure out whether or not we have a strong U.S. consumer or a weakening U.S. consumer. Both may be true, and it depends on where you look. So Walmart, you can see over the last 2 months, up about 14% on the year, up even more. So that big box discount retailer, better prices, really doing well. And large part, we've been hearing stories about people with higher incomes recently shopping there for food. Procter & Gamble, good quarter recently. They've raised the growth looks good for some of their essential products. But when we go discretionary-wise, Urban Outfitters, July and August started to weaken. They're expecting that may continue into the second half. And just yesterday, designer brands over the last 2 months down 30%. They put up a bad quarter. This is, of course, the owner of Keds and DSW. So it really seems as though discretionary is not doing as well, whereas staples still hanging in there. If we connect this to consumer sentiment, because, of course, consumer sentiment will be out tomorrow, if we go into the Bloomberg terminal and take a look at what's happening here, well, actually, we don't have that. But what we do have is the bifurcation right here between that split between discretionary in orange, up about 7% on this year, so not so shabby. But take a look at staples and the S&P 500 up closer to, let's call it 16 to 17%. The big question is which side is quote unquote right, Katie? Which side is more accurately representing the consumer? We, of course, don't know that right now, but 66% of the economy, it's super important to watch, and of course, for directions of stocks.
And of course, we'll get another clue tomorrow. Abigail Doolittle, really appreciate that. Let's keep the conversation going now with iCapital Chief Investment Strategist Anastasia Amoroso joining us on set now in in person. Great to see you.
Great to see you, Katie.
So Christine Lagarde just finishing up, of course, the ECB press conference. Compare and contrast her tone with what you're expecting to hear from Jerome Powell next week.
Yeah, I think it's quite different. What really strikes me is that Christine Lagarde seemed a lot less concerned about growth and a lot more concerned about inflation, and which is quite different. And I would say quite the opposite for the Fed, because the Fed is more concerned about the labor market. But, you know, she was really, I mean, there's really not much attention given to the growth outlook, which is weakened. And for example, for this quarter, just 0.3% annualized growth that's expected. You know, you would think that if this was in the United States, you'd have a pretty big reaction to that, but it's not the United States. You know, the other thing is she is quite concerned about inflation and hence the lack of willingness to pre-commit to the future path of rate cuts, I should say. So it is going to be meeting by meeting. It is going to be, even though she said don't pay attention to particular data points, but it is going to be, you know, watching the data points like inflation. And if the consensus estimates prove to be right and inflation does grind lower towards, I think, 2.3% by the end of next year, that will produce a series of rate cuts. And this is so different from the Fed, because Fed Chair Powell has said that, well, we have a lot of room to work with, you know, when it comes to where the nominal Fed funds rate is, where inflation is, where the neutral rate is, and we're overly restrictive. So the Fed seems to have a greater willingness to move than the ECB.
Now let's talk about what's going to move the market as well. Is it really what's going to happen with the Fed at this juncture when you see kind of single names? NVIDIA yesterday really turned around the market here. You're looking at NVIDIA today trying to notch its fourth day of gains. Let's see if they can get there. It's been kind of staggering in the early trades. Is it really the AI trade when you see a day like today where almost all of the Philadelphia Semiconductor Index is dragged down once again?
Yeah. Well, I think there are two main stories or maybe questions that the market participants are trying to game out. The first one is, are we headed into a recession or are we not? And that's why you've seen the defensive sectors like utilities, for example, really outperform since about the middle of July. And I think this tug of war of data is going to continue, where we get a data point a little bit weaker. Oh no, we're going to recession. You get another one, and that sort of erases that fear. So, you know, so that's why I would expect the defensives to continue to provide the anchor and the pillar to the markets. But at the same time, Shonali, I do look very closely at the semiconductor space. And, you know, look, what happened to semiconductors, the valuations got very extended relative to the S&P, for example. The ratio was 1.4 times. Utilities, by the way, were quite cheap to the S&P. And so that has started to reverse over the last several months. So semis have come back down to earth in terms of valuations. They're not quite in line with the S&P. They're still expensive relative to their 10-year averages. But if you look at the multiple adjusted for growth on semis, it's actually below the long-term averages. So I think investors need to look at that very closely and say, well, do they expect the growth in semiconductors to continue? And what I heard from a lot of the Goldman Sachs tech conference reports, whether it was NVIDIA, whether it's Marvell, whether it's Broadcom, they are continuing to see very strong demand for artificial intelligence. And I think one of the reasons why NVIDIA, you know, had the standout day yesterday was because they also talked about how much additional rental revenue the hyperscalers can generate, you know, if they invest in NVIDIA chips. And so that ROI, I think, is so huge for the industry right now. And we seem to have it, so therefore that should support the investment cycle into semis. So despite the weakness, I think investors should be looking at this space and adding to it.
I looked at the intraday swings, and Jess Menton put together a chart for us to show on the S&P how big they are. Yesterday we had the second biggest intraday swing since 2022, and if you look at the chart, we're getting bigger groupings of bigger swings. Are we going to see this kind of volatility through September 18th? Does it go until November 5th? I mean, what is going to, you know, calm this market back down?
Yeah, I think, you know, plus or minus 1 month before and after the Fed rate cut, or maybe even extend that to 3 months before and after. I think it's normal to see elevated volatility because of what I mentioned earlier, is we're trying to figure out where the economy is headed. I think it's going to become clear where the economy is headed more so in the next 3 months, especially once some of those rate cuts start to filter through. So that's the first thing. The second thing is election certainly has a role to play. And if you look at the manufacturing numbers, for example, manufacturing activity has slowed down quite a bit, particularly a new order component. And I think that has something to do with the election, because if you are a company trying to invest in property, plant, and equipment, do you know what the rules are going to be? Do you know what the tax code is going to be? Do you know what the tax incentives are going to be? The answer right now is probably not. It's going to depend on the election outcome. So I think that's part of what's also producing this volatility in the equity market. And we also see this when we look at the Republican outperformance baskets, the Democrat outperformance baskets. So, Matt, I think there's a lot for markets to parse through, and that's what they do on a daily basis.
Anastasia, we thank you so much for your time. That is iCapital's Anastasia Amoroso in the middle of what's been a lot of volatility in these markets heading up to the election. Now, coming up, a double downgrade for Micron Technologies. We're going to tell you what's behind that call next in Top Calls. This is Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
What did you say to your mother and father when you said, I'm dropping out, despite the fact I said I wasn't going to drop out?
Well, I said I'm just taking some leave.
Oh, leave?
Yeah. I think I'm still technically on leave. Harvard has kind of a funny relationship.
How long
with
can you be
out.
on leave? For 10 years or so?
Well, I guess we're going to find out, yeah.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names at Jackson Hole are on Bloomberg.
So we know that unemployment rates have gone from about 3.4% to 4.3%. That's a big change. Now, it's from super hot to solid, right? So I don't want to make it seem like labor markets are weak. But it really starts to tell me that things are much more imbalanced than they have been for quite some time.
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, BNP Paribas double downgrading Micron to a sell rating and slashing its price target nearly in half. The firm says that Micron will underperform its AI peers through 2025 thanks to an oversupply and impending correction in the chip memory market. Next up, Wolf Research is upgrading Roku to a buy. The firm says that sales at the streaming video platform poised to accelerate from here. And remember, earlier this week, Wells Fargo's raised its rating on the stock thanks to the potential of its Roku channel. And finally, we have Stifel cutting its rating on Simon Property, saying that the stock is no longer a buy. The firm says that the company has outperformed the sector this year and cautions that shares could lag in the near term, Matt.
All right, coming up, junior bankers are getting their hours capped at JP Morgan in a good way. That and more on our Wall Street Beat. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg Open Interest. Let's take a look at where stocks are trading, of course. About 23 minutes or so into the U.S. trading day, you can see we've now reversed lower on the S&P 500, the NASDAQ 100 too, but we know that we've seen a lot of volatility in this market. This stat coming from Bespoke Investment that the last time the NASDAQ was down 1% intraday, which happened yesterday, but finished the day higher by over 1%, was on the bottom in October 2022. So we'll see what happens from here, Shonali, but right now stocks are lower.
They sure are, and it's time now for the Wall Street Beat. We're going to talk about working conditions. Two of Wall Street's biggest banks are rolling out measures that may ease junior bankers' workloads. This comes after complaints about long hours, increasing complaints. JP Morgan now plans to cap hours for junior bankers at 80 hours a week. Bank of America, meanwhile, says it will monitor closely individual workloads. We are joined now by Catherine Doherty, Bloomberg's finance reporter, who has been covering this story really for the last couple of months. These calls have been building. There is a difference this time around. A couple of years ago when we saw the junior banker revolt, let's call it, it was about pay. It was at a time of a deal boom. This time around, deal volumes are coming back, but the nature of these complaints are somewhat different, aren't they?
They are. And the real question will be, are there changes that stick? Are there changes that actually make a difference after we hear these complaints? Because complaints are not new. They come up time and time again. As you mentioned, pay was one moment in time. But this whole issue and the tensions around the type of working conditions, the hours that bankers are working, the lack of sleep, their health that is deteriorating because of that. This is something that is not new on Wall Street. Veterans will say this is part of the game and that you have to put in the work in order to earn your space in the industry. And so now what we've really seen is pushback from the junior bankers and some really very important moments in time at Bank of America. One of their bankers passing away after working on a very large M&A deal. And that really sparked an outcry, regardless of the really the rationale and the reason behind his passing, it just brought up a whole new conversation, renewed the conversation about working conditions. So now what you're seeing is the banks actually putting into place some changes. So for JP Morgan, capping the hours at 80, and for Bank of America, they're improving their system. So instead of reporting hourly workloads every week, the bankers will now be putting in their hours each day so that it's accurately tracking, or more accurately tracking, the type of work that they're doing.
All right, Catherine Doherty, really important reporting. Appreciate your time, of course, on that story that JP Morgan and others looking at ways to cap junior banker hours. Meanwhile, you take a look at markets right now, again, to the downside. Of course, we've seen massive volatility in the last week or so. Really, the whole month of September today is no different, to a lesser degree, but the S&P 500 searching for a direction right now, and right now, Matt, finding it to the downside.
All right, coming up in the next hour, Nimrit Kang joins us explaining how she is taking advantage of this market volatility that we've been talking about. And the co-CEO of TickPick discusses dynamic ticket pricing and transparency. This is Bloomberg.